What's up, you guys? Hope you guys are having an awesome Sunday. So here's a very important reason to why 95% of people don't make money trading. And that's because they don't use a stop loss. So this is a very controversial topic, as a lot of people argue, oh, just use a mental stop loss. However, that's in an ideal world. So using a stop loss is more practical. So here's why. So when you can think logically, let's say an emergency situation doesn't happen yet, you'll think, okay, I'll use a mental stop loss, and when it happens, I will exit. However, 95% of people, actually 100% of people, are very emotional. So when the actual situation happens, they freak out. So let's say, for example, they have a mental stop loss at 54.5K for Bitcoin, and then they entered at 57K, it goes up to 59K, they're up 5K in profits, but then it goes down to 54.5K, and now they're down 1K. So a lot of people will think, oh, I actually lost 6K, which is the 5K profit, plus 1K going down. They'll think, oh, I want to make my money back, I lost 6K. Then Bitcoin goes to 53K, they lose another 2K, it goes to 52K, it goes to 51, 50K, etc. And then they get liquidated in their position, or they just freak out, they sell out, and then when there's a great opportunity to buy back in, let's say Bitcoin bottoms out at 50K, they freak out, they're scared, they're like, oh, Bitcoin's probably going to go lower, this probably isn't a good position to buy, even though the indicators like the RSI, the channels, they might say that this is a great opportunity to buy in. They'll probably freak out, not buy in, and then it goes back up again, they get FOMO, and then they get a bad position. Same thing happens over and over. So the core thing of this is that people get emotionally attached to their egos, which also comes from tracking P&L, so the amount of money they make or lose. So yes, there are very few people that are very disciplined that can actually do this. However, most of them have had their skin in the game for several years, and they have probably used stop losses in the past at the beginning stages of their trading career to help build that discipline. So yes, there will be several opportunities where you might get faked out by some manipulation. However, it's better to get faked out in those very rare instances and actually protect your account, as opposed to having your account blow up if it continues going the opposite way of what you least expected, which will happen, especially in crypto, more often than you think. So here are some factors to consider with how you use your stop losses to maximize your reward to risk potential. The first thing is to take in mind the context of the market, whether the market is more bullish or bearish, whether it's more volatile, more choppy, more of a stagnant market. So let's say, for example, it's a more bullish market. So maybe you could widen your stop losses a little bit. So let's say 55K is a key support. However, you notice that 3 times in the past, it wicked down to 54.5K, and it quickly wicked up to 56, 57K. So you could put down your stop loss at 54.3K, somewhere around there, instead of right at 54.9K. Vice versa for shorting in a bullish market. Let's say there are very extreme signals which indicate a great short signals coming in a bullish market. So maybe the 30-minute, 1 hour, 4 hour chart is very overbought. So even though it's overbought, you have to take in mind the bullish context of the market. So it could stay overbought for several hours, even 1 to 2 days. So you could set a tighter stop loss. So let's say there's a big resistance at 61K. So instead of it being wider like it was from 55K to 54.23K, you could put it at, if it was 61K, you can put it at 61.2, 61.3K. Then maybe it gaps up to 63K. Then you enter in, you set another stop loss again at 63.2K. And another thing to consider is the asset you are trading to. So Bitcoin is less volatile than Ethereum, which is less volatile than Litecoin, and try to figure out what assets usually trade and perform the best and see their habits to be volatile. And then also Ethereum follows Bitcoin, and Litecoin tends to follow Ethereum, as Bitcoin's the big player, Ethereum's a major cap, Litecoin's a mid cap, and etc. So for example, it made sense to put that stop loss at 54.3k when this key support was at 55k, which is around like a 1.2, 1.3% difference. However, for Litecoin, that might be 3%. So let's say resistance is at 230, you might put a stop loss around 237, which is like 3%. So then Ethereum, same thing, maybe somewhere in between. If it's at 2000, you could put a stop loss maybe at 2%, so 1965 or something. Secondly, try to look at your loss potential. So a lot of people look at how much money they can make, but they forget to look at how much money they can lose. So think of how much you are willing to risk, because you can grow your account 500%, but all it takes is one single trade, you lose 100% of it. So if there are any insane opportunities, maybe try to keep it at less than 5% risk. So let's say you have a $100,000 account, Bitcoin gaps down 20-30%, extremely low, extremely low. And then for a trade, you can risk 5k, and then maybe the trade has the potential to go to 15k or 20k, like 3-4-1 or risk ratio. But let's say the price action is somewhere in between, so the reward to risk potential is not as high. Let's say Bitcoin is around 56, 57k, and resistance around 60k, so it doesn't have as much reward potential as if maybe it was at 51k. So it would make more sense to risk less. So instead of 5%, you could risk 1 to 2%, as it could easily go either way depending on the overall context. So this is a big mistake a lot of people make. When price action becomes choppy, becomes unknown, people tend to get impatient and to go even heavier. However, since price action is unknown, it's in price discovery mode, it tends to go more frequently the opposite way of what they think, and then they lose a lot of money. So just risk less when you're more unsure of the direction of the markets, and don't be afraid to go in heavier when more people are afraid. So a good tip would be, if everyone's extremely bullish and it's oversold on all the charts, try to look for a good short position in this bull market. If everyone's extremely afraid, just like what happened when it went to 53k, I believe, or 50k previously, everyone was super afraid. A bunch of the YouTube videos are pushing out, oh, Bitcoin might go to 45, 42k. That's when, even though the chart said that 50k was a great position to accumulate, that's when you go heavier in long. And the last thing to consider is to actually scale your stop losses. So it doesn't have to be all or nothing. So let's say you were originally planning to lose 2% of your accounts in this one trade. However, it's looking like it's going to go in the opposite direction more and more. So maybe you were shorting, but then a bullish catalyst comes out. It pushes price action up a little bit. So what you could do is you think, okay, based off the charts, it could go lower. So instead of risking 2k, you take out a third of your position. So you lose 600 off the bat. So now your loss potential is only 1400 if you took out that position, as opposed to waiting and gambling. So if you're ever unsure of a position and you're not willing to lose that capital because it's not going a certain way as you think it will be. So for example, if you were wanting to short, but then it goes up, then it forms like a bullish flag, price action consolidates around the all-time high, then you could think, okay, maybe instead of risking 2K, I only risk 1K, which even means taking a loss up front so that you could slowly keep your peace at mind, which will inevitably give you a better state of mind to make decisions from, and to also be comfortable for your trades. So you don't want to be in any trades where you could get emotional, which will cause you to make a lot of bad decisions down the road. So as long as you keep in mind the context of the market, you keep in mind how much you're willing to lose, and as long as you're able to be open and not have that all or nothing of just wanting to lose 100% of your trade or hitting your target profit by scaling your stop losses, you're going to do just fine. So try to let go of the ego, try your best to really make the best decision, and long term you will do great. So hope you guys have a great weekend, and talk to you guys tomorrow.